Hello, in this session we are going to be covering the topic of cost report documentation, specifically a relatively recent change that was made by CMS through the Federal Register and how this is going to impact you as a provider as far as the documentation you need to submit. So for an agenda, we're going to be talking about a background of those changes that came through the 8/17/2018 Federal Register, when it is effective, where to find information on what you need to submit, and we're going to go through a review of the optional templates that will help you with the submission of that documentation. So as a background, first of all, in the August 17th, 2018 Federal Register, this change came about and it is effective for all cost report periods beginning on or after 10/1 of 2018. Now, assuming you have a standard 12-month cost reporting period, this, of course, will impact the 9/30/19 and later fiscal year ends. But obviously, if a provider had a short period cost report that began 10/1/18 and ended maybe 6 months later, it would impact them as well. So the change, we're going to go through the various paragraphs of change through that Federal Register, but the main change is that the cost reports will now be rejected for lack of supporting documentation if they do not include detailed listings for the items included in this list that correspond to the amounts reported on the provider's cost report. So in other words, if you report a certain bad debt amount, you need to have the documentation in the form of a listing that details that amount. It has to correspond to the amount you've reported. So there are 5 different items included in this Federal Register. The first one would be the graduate medical education, the indirect medical education, GME, IME, the interns and residents documentation. This is the IRIS system, interns and residents information system. So this documentation's been required for quite some time. Now the big change, of course, is that the amounts or the FTEs have to correspond to what's been reported on the cost report. Previously, it was just submitting the listing itself, submitting the diskette, the software that was required. The next one would be Medicare bad debts, and then we have DISH Medicaid eligible days, Worksheet S10 charity care or uncompensated care amounts. And then notice in italics here I have home office costs. And the reason I have that in italics is that the requirements are slightly different for that. It's not necessarily a listing that you're going to be submitting. It's the home office cost statement. But we'll see how that's different in just a little bit. So the big change through this Federal Register is that previously the lack of documentation might just lead to an adjustment to disallow that cost or that item at the desk review, possibly tentative settlement. Now with this change, this will lead to rejection at the submission of the cost report, and a rejected cost report could lead to withholding of the claim payments or any other settlement payment that's coming through. So it certainly is an important change, just something to keep in mind here. Again, it's not brand new. It's been out since August 17th. But, of course, it's just now starting to hit certain cost reports because they had to begin after 10/1/18. And, of course, 12 months generally for a cost report, another 5 months to file. So that's why we're talking about it today. So I'm going to go through each of the different sections here, and I have some excerpts from the Federal Register. So the first one I'll talk about would be the Medicare bad debts. So this paragraph I have right in the middle of this slide, it says effective for cost report periods beginning on or after 10/1/18, for providers claiming Medicare bad debt reimbursement, a cost report will be rejected for lack of supporting documentation if it does not include a detailed bad debt listing that corresponds to the bad debt amounts claimed in the provider's cost report. So those of you that are familiar with the cost report submission and bad debt specifically are familiar with Exhibit 2 of Worksheet S-2 Part 2. Used to be an exhibit of the old CMS Form 339. It was Exhibit 5 at the time. It's the same thing. That's the minimum required documentation that has always been required to be submitted. But again, the big difference now is that it's now a rejectable item if it's not submitted at the time the cost report is submitted. And the other thing I want to mention is that Exhibit 2 is just minimum documentation. Now, as a provider, you can submit a listing. You don't have to use their actual form. You could submit an Excel spreadsheet. Maybe it has more columns than what is included, but that Exhibit 2 is the minimum. Now, later on, we're going to be talking about an optional template on our website, the WPSGHA website, that you can download. It does have more columns there, but the columns are it contains the information that would be needed if we were to review this at final settlement anyways. So we'll go through that in just a little bit. The medical education, graduate medical education, and indirect medical education. Again, the IRIS documentations are really the same as they have been before. The IRIS diskette or the IRIS CD, the IRIS database file, has always been required for quite some time. The big difference here is now the FTE count on your cost report for both IME and GME must correspond to the listing that you're submitting, the IRIS submission. So that's the big change there. Just it could be rejectable. Then we get into the topic of DISH, Medicaid eligible days. So again, this is from the same Federal Register, and I'll skip to probably the third line here, fourth line maybe. Again, the cost report will be rejected for lack of supporting documentation if it does not include a detailed listing of the hospital's Medicaid eligible days that corresponds to the Medicaid eligible days claimed in the hospital's cost report, specifically Worksheet S-2, where the detail is provided. In addition, if the hospital submits an amended cost report that changes its Medicaid eligible days, the hospital must submit an amended listing or an addendum to the original listing of the hospital's Medicaid eligible days that corresponds to the Medicaid eligible days claimed in the hospital's amended cost report. So that's a fairly lengthy way of saying whatever you're submitting on the cost report has to be detailed in a listing of those Medicaid eligible days. Again, we have an optional template on our website, and we're going to talk about that toward the end of the session tonight. Then we get to Worksheet S10 Uncompensated Care or Charity Care. This has become an increasingly important set of data for our reviews because this does feed into the DISH Uncompensated Care payment. So again, we have the same basic thing here. Effective for the cost report periods beginning on or after October 1st, 2018. For DISH-eligible hospitals reporting charity care and or uninsured discounts, a cost report will be rejected for lack of supporting documentation if it does not include a detailed listing of charity care and or uninsured discounts that corresponds to the amounts claimed in the hospital's cost report. The one thing I want to mention here is that this section of the Federal Register focused on the charity care and uninsured discounts. And again, if you're familiar with this S10, the uncompensated care, you'll know that those are reported on line 20 of Worksheet S-10. But in addition to this charity care or uninsured discount, we also need total bad debt information. So it's not the Medicare bad debts that we discussed before. It's that plus some. It's the total bad debts regardless of the payer types. That feeds into this Worksheet S10 Uncompensated Care. So again, we have an optional template on our website, and we will talk about both the charity care and the bad debt. And we finally get to the last piece of this, the home office costs. So this one's a little bit different. It's still the same effective date, but now it says for providers claiming costs on their cost report that are allocated from a home office or chain organization that has a different fiscal year end, a cost report will be rejected for lack of supporting documentation if the home office or chain organization has not completed and submitted to the chain provider's contractor a home office cost statement that corresponds to some portion of the amounts allocated from the home office or chain organization to the provider's cost report. So we have a few things to dissect there. The first piece is that the home office cost statement must be submitted to the chain provider's contractor. In other words, the home office's contractor. Now, in many cases, the home office and the component providers, the hospital, they're administered by the same MAC, but that's not always the case. So what this is essentially saying is, as a home office, you're required to submit your home office cost statement to your MAC accordingly, to the home office MAC, and then the provider, whoever their MAC is, if it's a different one, they'll be able to get the information from the home office's MAC. So that's the key thing here. But the other piece that seems a little odd at first is that the home office cost statement must correspond to some portion of the amounts allocated from the home office to the provider, specifically Worksheet A81. The portion we're talking about, the reason this isn't an exact match, is that you may have more than 1 year of a home office cost statement that corresponds to that provider's cost report. For example, if your provider cost report is a June 30th cost report, but the home office cost statement is a 12/31, then there are going to be two different cost statements that use half of the data from each of them for that component cost report. That's the reason this cannot match perfectly. The sum of the two, when we see all the allocation, that should match perfectly, but one particular home office cost statement may not match. The other aspect of that to consider is that the second half of that cost report data, that home office cost statement may not even be completed at that point. The year end may not have been reached by the time you settle, or by the time you submit that component cost report, and that's fine. Of course, eventually we will need the other half of that, but it would not necessarily be required at the time of acceptance because it may not have been completed at that point. So we continue on to the Federal Register, and it talks about how when the provider and the home office have differing fiscal year ends, that the provider's home office costs must correspond to a portion of the amount reported in the provider's cost report, for the same reason I just mentioned a bit ago. However, if they have the same fiscal year end, then that little exception doesn't apply, and if it's the same fiscal year end for the home office and the component provider, then those costs must correspond to the cost reported in the provider's cost report. So then they must match at that point. Now, with the home office, another reason it's a little bit different is that there's no separate template. It's just your normal CMS form 28705, the home office cost statement. That's what's required to be submitted. So this is just a summary. Again, if it's the same fiscal years, the provider and the home office, then the amount reported on Worksheet A81 should match the amounts on the home office cost statement. But if they are different fiscal year ends, then the providers should report each separate cost statement or other related party on its own line of Worksheet A81 to allow for clear reconciliation. Now, that's a request. It's not something that's in the actual Federal Register, but it needs to be clear as we're doing this reconciliation which amount of Worksheet A81 should tie to the first home office cost statement, which amount should tie eventually to a later home office cost statement, and perhaps which amount relates to some other related party cost altogether. We need that clarity to be able to handle that reconciliation. Now, at some point, that may become a requirement from CMS, but at this point, it's just a recommendation or a request. Now, as far as the home office, when do you need to file the home office cost statement, or how do you set one up? Basically, if you have an entity that furnishes some sort of central management and administrative type functions to the provider, and at least one other entity. Now, when I say entity, I'm not necessarily talking about another provider. It could be another provider, but it might be some other entity. If they have common ownership or control over both of those entities, if the home office or the related party has control over both of those entities, Medicare requires a home office cost statement under that above Federal Register requirement. If you don't already have a home office number to be able to submit a home office cost statement, then you can send us either an email or you can send it in writing to this information below, and you can get one set up. So the next question that comes to mind is, where do you find this documentation? So we have this information on our WPSGHA website, WPSGHA.com. Now, we also have the link down here, but obviously if you're viewing this video, you can see it's a fairly lengthy link. You can certainly type it in if you want to, but the easiest way to do it would be to type in the WPSGHA.com, go to our main website, and then when you get to the search bar, type in cost report documentation. And when you do that, you're going to find the article that contains this information, the one we're going to talk about. The other way, though, is if you just look at our main web page, go to the audit section, you'll see all the key issues. You'll be able to find that article down here. It's under cost reports. It's cost report documentation requirements and template. Now, in that article, you're also going to see this YouTube video linked there once it's published. Reminder letters are going to be sent out in the near future to providers as they get closer to their fiscal year ends that need to be submitted. So you will be seeing this again. And another thing, we're going to be setting up a new email address called newacceptrequirements@wpsic.com. If you have any questions on the templates or anything like that, any questions on the requirement, you can certainly submit them to that portal. Now the templates. Early when we went through the Federal Register, I talked about optional templates that are available on the WPS website. And the key thing I want to point out here is that these templates are not actually required at this time. They're optional. We recommend them, but they are just optional at this point. But it is possible CMS may be requiring these templates or a slight variation of these templates in the near future. There are requirements they have to go through to get those formally approved. There's a comment period, but again, something may very well be required at some point in the future that ties together with this new documentation requirement. So the next thing I wanted to do is go to our website and take a look at that article, show you what I'm talking about here, and then we're going to go through each of the templates. So here you'll see the WPSGHA website, and I've already clicked on the actual article. And it goes through a lot of the same information that we've already talked about. You can click on this link to find the Federal Register, but I have a lot of excerpts from the Federal Register in here. And I also have the templates linked within each section. So you'll see the Medicare bad debts, the DISH, uncompensated care, and then a little bit of information about the home office. The YouTube link, once it's published, will be included in this article as well. So let's go through each of the templates. Now you'll notice that medical education does not have a separate template, and the reason for that is that the IRIS requirement has always been in place. It's been in place for decades now. So no real change except the fact that it has to correspond to the amount you've reported. So if we click on the Medicare bad debt template, you're going to see this document that when you first start out, it has two tabs. The first tab is an instruction tab, and it shows you what each of the columns in the other tabs are going to be used for. So feel free to peruse through this. Each column has a label and an explanation to it. Now this bad debt summary tab that you see right off the bat, let me change that for a second. This bad debt summary tab, this obviously you'll want to fill out your provider number, your fiscal year begin and fiscal year end, so we can identify what provider this is for. But it gives you a chance, if you have different subunits or components to this hospital, you can type in the provider number. So you might have an acute care hospital with a psych subunit, a rehab subunit. You might have a critical access hospital instead, or a SNF unit. So go ahead and type in the provider number in the orange. And then what happens here is, to get each listing to populate, enter an X, or really enter anything in the yellow cell, and you'll notice that it unhides this particular template, which we'll see in just a bit. This is the listing for that. If you've already typed in a provider number, it'll carry over to that up at the top. And once you enter detail in that tab, it'll show on this summary. If I was to enter $100 of bad debts here, it'll come up, it'll show up on this listing. And it also tells you the cost report reference that should tie to. This amount goes on this E Part A line. So if you enter X's in 4 of these tabs, notice that it's opening all 4 of those tabs up. And anything I put in there, you'll notice it's cell Y11. So if I go over to column Y, that's the allowable bad debt. And it's always going to be 11. 11 is basically the top row for that listing. That's what it's carrying over. So if I was to put in $100 here, go back to the bad debt summary, now it carried over $100. So that's how this works to get it started. And these references should help you a little bit. But let's look at the actual listing. So this is a Medicare bad debt listing. Again, don't adjust row 11 because that is your top row. You can add as many, you can just keep including as many lines as you need below it, but don't adjust line 11 or else it won't carry over properly. So here you're going to have the patient last name, basically this patient claim information that is required. This is all the same information that's required on the Exhibit 2 currently. You'll see the Medicaid number if it's a Medicaid crossover bad debt. Now obviously, since this is the traditional tab, this really wouldn't apply. But the idea here is that we wanted all of these columns to be similar across the listings. So you shouldn't generally see a Medicaid number in a traditional listing, although you would see it in the crossover listing. Now, was this patient deemed indigent by the provider? Not related to Medicaid, just a provider deemed indigence, yes or no? And we'll come back to that one later on over here as well. Now there's some patient claims payment information. The Medicare remittance advice date, Medicaid remittance advice date if it's a crossover bad debt, and then the date remittance advice received from some other secondary payer if this is applicable in that case. Column 12 is the patient responsibility. So we need to know how much was the patient supposed to pay to begin with. It might be if the patient was an indigent patient, maybe they were still entitled or they're still required to pay 50% of the bad debt and the other 50% was waived. If it's a Medicaid patient, they might have a Medicaid share of cost. However, if it's a qualified Medicare beneficiary, a QMB, then enter QMB for that patient because that'll show that there is no patient responsibility. Date of first bill, that's needed to determine whether or not the bad debt might be allowable. Timely billing, and also the 120-day rule, quote unquote, starts with the first bill date. We need to know the internal accounts receivable write-off date in order to be able to allow it. It has to be written off to your books before it can be written off to Medicare. Did you send it to a collection agency? What was the date it was returned from a collection agency? What was the date all collection efforts ceased? And then column 17 is basically a summary. It's the latest date of these columns 14, 15, and 16. The idea here is you cannot write it off for Medicare purposes until the later of those dates, possibly even after, but it certainly has to be, all of these things have to have happened before you can write it off for Medicare purposes. So that's the date that should match the period in question. It has to be within that cost reporting period. Now column 18, this is recoveries, 18 and 19. These are for recoveries. So if a patient makes a payment after the bad debt has already been written off. So column 18, this is the amount of payments that were made after the write-off. So it's going to be at a later period. And column 19 is the cost reporting period that the original bad debt was written off in. So this is important so we can track it back to the original bad debt to see if it was allowed to begin with, and if so, this recovery should be offsetting current year bad debts. Now, 20 and 21 are the total deductibles and coinsurance. These are also required by the current Exhibit 2. So whatever the total Medicare deductibles and coinsurance amounts are, that doesn't mean the entire 100% of it's going to be a bad debt. The patient may have paid some. Column 22 is about the current year payments before the account was written off. So obviously that would reduce the amount of bad debts that would come out of these deductible and coinsurance. If there's $100 in coinsurance, but the patient already paid $20, then at most you're only allowed $80 of the remaining amount. The other thing here is 23 relates to 22. What was the payment type? Was it a patient payment, a third-party insurance payment? Who paid it? Column 24 is what amount was allowable as bad debt. What are you actually reporting as bad debt compared to what was the total deductible and coinsurance? Now, keep in mind, this is the column that ultimately goes to the summary. Column 25 is just a provider comment if you have any comments to add in there. Now, there are a few columns toward the end that are just informational only, just little flags you can consider to see if something may look unusual. Is there a potentially untimely bill? Now, again, if you waited too long to bill the patient, you might need to explain why did you wait so long, what were you waiting for? Were you waiting for a Medicare or Medicaid remittance advice? Potential 120-day rule violation. Now, I use the word violation there loosely because the 120-day rule is a guideline. The idea here is that unless there are extenuating circumstances, you should be waiting at least 120 days to write the bad debt off. And if there are any extenuating circumstances, obviously those need to be detailed. And then just some other flags. What day can you report it? Is this day within the current cost reporting period? And is there anything illogical about the bad debts you're reporting compared to the total Medicare deductible and coinsurance payments minus the current year payments? So these are just flags to consider to help you kind of self-review before you submit that listing. So that is the bad debt listing. You're going to see the same thing for each of the tabs. Again, they will all flow over to this summary tab. The next list I wanted to go through is the DISH Medicaid eligible day listing. Now, you'll find this in the same place in the website, and you'll see an instruction tab that gives you a little bit of an overview about DISH in general, how it works, how it's calculated, and then they define each of the types of Medicaid days that, again, they come from Worksheet S-2, Part 1. They have different lines for the in-state Medicaid paid days, in-state Medicaid eligible but unpaid, out-of-state for both of the same things, Medicaid HMO days, and then other Medicaid days. So they each have their own line on Worksheet S-2. This gives you a summary as to what that is and a definition to look at. And then down toward the bottom of this instruction tab, it defines what each of the columns are for. So the design of this particular spreadsheet is the same basic design as the bad debts. Put in your provider number and enter an X or really anything in a particular section here, and it'll populate the tab. And everything will flow over to the summary again. And it tells you the reference as to where this should be reported. The same idea here. You have the actual total that's coming in. This is what flows over to the summary. Medicaid eligible days. We have 18 columns in this one. And again, you start your listing here and you work your way down. You have a lot of the same items. The name of the patient, patient account number, medical record number, date of birth, gender, admit and discharge date, eligibility codes. This is the key thing. Of course, the days themselves are important. We need to know the length of stay to determine what could possibly be a Medicaid eligible day. But the important thing here is the eligibility code from the state, because just because it's eligible for Medicaid does not in and of itself mean that it's eligible for DISH. Only those Medicaid, those state paid claims that are Title 19 Medicaid, in other words, federally funded and state funded, only those are eligible for DISH treatment on the Medicare cost report. So it's very important that we have that eligibility code. Part of the audit is actually matching that eligibility code to a listing of eligible codes. So matching that code from that particular claim to a listing of eligible codes. And you'll see some other information here. Again, these are all defined, but we have the L&D, labor and delivery room days. We need to know who the primary payer was, the secondary payer, Title 18 eligibility indicator, Title 18 eligibility start date, end date, and all of that. Now, the reason, Title 19 is the Medicaid we're talking about, Title 18 is Medicare itself. We need to identify whether this is a Medicare eligible claim as well. Is it just Medicaid, or is it Medicare? Is it a crossover, a dual eligible claim? So we need to be aware of that. That's what this column is for. And then, of course, you have a section for comments. So you'll see the same basic information in all of the other tabs. It will flow to the summary. And again, you have your instructions tab if you need it there as well. And finally, we get to the worksheet S10 Uncompensated Care. So with the worksheet S10 255210 tab, this basically summarizes some of the requirements for S10 in general, talks about the cost reporting instructions. So all of this you can find in the cost report itself, but we've just reprinted it here for a quick summary. The instructions tab, it gives you more information about each of the individual tabs, what each column means, what it's for, another summary. Now, this is a little bit different than the other two templates because there's not one big summary sheet. Instead, we have these three different listings that support different lines on the cost report. So the first thing is the charity care. Now, what I do want to mention is the Federal Register discussion is really focused on this charity care and uninsured discount. So we discussed this particular template in another YouTube video that focused on worksheet S-10, but we're going to go through it again here as well. So we need to know certain pieces of information about these claims to determine whether or not they're really eligible for uncompensated care. So we need to, first of all, know, is this an insured patient or an uninsured patient? Because they go on different columns of worksheet S-10. What was the primary payer plan? Now, obviously, that would only apply if it was an insured patient. Same with secondary payer. What is the payment transaction code? In other words, if there was a payment made, what type of payment was it? Patient identification number, and then just a variety of things related to that particular patient, including the admit and discharge date for the claim. We need to know the service indicator. Was this inpatient or outpatient? What is the revenue code for that particular service? And the total charges for that revenue code. The date of write-off to charity care, because it has to be written off in that cost reporting period. That's what determines whether or not it's allowable or not. Any patient payments that were made for those services that were provided. Now, what I want to mention here is that this is not necessarily the same as what you're going to see on the patient cash collections. This is just identifying if the patient's made a payment, then obviously it's not uncompensated care because the provider has been compensated for it. So this is reducing the amount of total charges that would be allowable. Third-party payments, if the insurance company or somebody else makes a payment, that's obviously cutting down on the amount that would be allowable for Medicare. And then R, we need to see the patient charity contractual amount. How much of those total charges have been approved for charity care? This is what's going to be important, and this is the amount that's going to be reported on Worksheet S-10. But then we also need to see any other contractual amount. Was there an insurance write-off, a courtesy discount? Now notice the courtesy discount is not the same as the uninsured discount. An uninsured discount is allowable, assuming it meets all the other requirements, but a courtesy discount for specific types of patients coming in. So there might be a variety of reasons in your policy that you provide these courtesy discounts without any regard to the financial status of the patient. A courtesy discount is not allowable for uncompensated care. Now, this column T is a special column. It's for situations where you have a Medicaid patient or maybe another indigent care patient, and you have non-covered charges that relate to days that exceeded a length of stay limit. We need to know what those charges are, because not only are they going to be reported in line 20, they're also going to be reported in line 25 separately. And the reason for that is to carve them, to know how much of that that's reported in line 20 is really a charge figure versus an insured discount or, insured co-insurance or deductible. So again, we go into that discussion a little bit more in the Worksheet S-10 training, but we just need to know how much of the charges for this particular claim were related to those length of stay limits, the Medicaid length of stay limits. The next column is the patient cash collections. Now, you'll see a lot of the same basic things for the first few columns. And then we get over to column M, it's the date of collection. Column N is the amount of cash collection. Column O, it's the total charges for those services provided. Column P is the total physician or professional charges for those services. The idea here is that if some of these cash collections relate to hospital, but then some relate to the physician or professional charges, we need to know just how much eventually relates to the hospital only, because any physician or professional charge is not going to be allowable. We need to know the date of the original write-off to charity care. Now, this payment might be happening later, and that's fine. We just need to know what date it ties to, what cost reporting period it was reported on, what the original patient liability was, and whether or not there were any bad debts also written off on this claim. Because we need to know, is this cash collection related to a bad debt, or is it related to a previous uncompensated care amount? We need to know that. And finally, we get to the total hospital bad debts. So again, you're going to see a lot of similar information all the way until we get over to column N. It's just slightly different. The date of write-off to bad debt. Now remember, this is not just Medicare. This is any bad debt that was written off on the hospital other than a physician or professional service. So we need to know the date of write-off to bad debt because that's the cost reporting period it should be reported in. We need to know any payments for those services provided, whether it's from the patient or the third party. We need to know whether there was a patient charity contractual amount. Was there some other contractual amount? And ultimately, what is the amount that was written off to bad debt? All this other information is required to be able to reconcile and use a logic test to see if the amount reported makes sense. Whatever the total charges were for the claim, they could only be in one place. They can only be in the various columns here can only total that total charge. You can't have more bad debt and payments and contractual amounts than you had charges to begin with. That's what I'm basically saying there. So that takes us to the end of our discussion for this topic of cost report documentation. Hopefully this has helped to clarify what is required based on this Federal Register requirement. But please let me know if you have any questions. I'll be glad to help out. So thank you for your time.